If you've been trying to buy a house over the last couple years, I can promise you the market has not been kind to you. But I can tell you, better days are coming. What's up, guys? It's McKeown back again with another video this week, and today we're just going to discuss where the real estate market currently is. Now, if you've been someone that has either been in the market or personally purchased a house in the last couple years, you've seen interest rates go up, and you've also seen home prices continue to go higher and higher, probably higher than anything we've ever seen thus far. Now, what this video is for is to give you guys an update of someone that is on ground zero, someone that deals with this on a daily basis, someone that sees the market trends day in and day out, someone that's out showing homes, someone that is constantly selling homes. And I can tell you, we have absolutely hit a peak. And to be quite honest with you guys, we hit a peak about 30 days ago, and we're coming down from that. The reason why I tell you this and the reason why I believe in this, first things first, days on the market, as well as months of supply. I can tell you firsthand, months of supply in the local DFW or Dallas-Fort Worth area, we've actually hit a larger amount of volume than we did just 12 months ago. So to give you guys an idea, last April of 2021, we were sitting at 1.1 months of inventory. That means in the Dallas-Fort Worth area, if we didn't list a single home, no realtor was to put a home on the market for 1.1 months, that means we would have absolutely no inventory. Well, fast forward to April 2022, we're actually at 1.2 months of inventory. So comparatively to 12 months ago, we're actually to a point where we have more inventory than we did just last year. But on the flip side, February and March of 2022 was the lowest months of inventory that we've seen. In February, we were at less than a month, which we have never seen in our local market as far as available inventory. Then you fast forward to a month later in March, we had about 1 month, and then it went from 0.9 month in February to 1 month in March, and now we're at 1.2. So you can see it's starting to climb month by month as far as available inventory. So once again, guys, February was less than 1 month of inventory, and we've seen over the last 2 months that continued to rise. A normal market's going to be between 2 and 4 months of inventory, and right now, with the last data that we have in my local market, we're sitting at about 1.2. So if this continues to rise, eventually we're going to get to a point where we're actually back to not a seller's market, but a traditional real estate market. So what does this mean for you as a buyer? Well, first off, it means FHA and VA buyers are going to actually be able to get a home. To be honest with you, over the last 2 years, it's been extremely difficult to get any FHA or VA loan approved. And that's not because they aren't qualified. It's just when you have 35 offers on one single house, it's very difficult to be competitive when you're an FHA or a VA buyer. So this, again, opens opportunities for folks that haven't been able to get an opportunity in the last couple years to purchase a house. Second of all, on top of that, you could also start to negotiate repairs or negotiate prices. I haven't really had to negotiate prices down over the last couple years. It's actually convincing clients to go above list price in order to be competitive. So going back to a normal real estate market where if a price is $250,000 for a house and it doesn't sell in the first weekend, you can actually negotiate prices down. You can get the seller to do some repairs, and you can actually feel a little bit more comfortable purchasing a house rather than feeling like you're overpaying. Now, to give you guys some of my personal experience over the past couple months, I can tell you February and March was insane. I would write offers $100,000 over asking, or sometimes 25 to 30% over asking, and I still wouldn't get it. Now, fast forward to this past weekend when I was showing houses, I was actually able to get a house that only had 2 offers on it, and another house I was able to offer substantially over asking just because it was very competitive. But unfortunately, there are still some homes that are far more competitive than others, but I can tell you the market is definitely slowing. So with the stock market taking a tumble and real estate seeming to slow down, as well as the fact that interest rates are going up, I get this question all the time. Casey, do I buy a house now or do I wait? Do I sell my house and rent for 12 months or do I wait? What I can tell you, and this is not just from realtors trying to make a quick buck off of a commission sale, most people are saying continue to purchase if the means make sense. Now, the reason is because interest rates over the last 3 to 4 weeks have kind of plateaued. That doesn't mean that interest rates are going to go back down, and it definitely doesn't mean that interest rates won't go back up, but over the last 3 or 4 weeks, interest rates have kind of stayed in the middle of the fives. We've been absolutely spoiled over the last 5 years with incredibly low interest rates, me, myself included. Back in 2017, all the way up until my last purchase just here recently, I've never had an interest rate above 5%. And if you've got a parent that's in their 50s or 60s, ask them what they were purchasing homes for and what interest rate they had back in their day. And I can tell you, we are quite lucky to be in the mid fives right now. But what most people are saying is they aren't sure where interest rates are going to go. Now, a lot of people are saying they're going to continue to rise, but eventually fall off and go back to where a normal normal interest rate maybe in the 3s or 4s are. But again, all of that is pure speculation. But what I can tell you is there is a good bet on home values and where home values are going to go. There's no way it's going to be sustainable in terms of the growth that we've seen over the last couple years. I think personally in my local market in the DFW area, we've seen over 20% appreciation in 1 year alone, and there's just no way that's sustainable. A normal appreciation is 4 to 6%. We aren't going to see a loss in value in homes, especially in my market. We're just going to see a considerable slowdown in appreciation because, again, having a 20 or 18% appreciation rate over a 1 year span, there's just no way that's sustainable. So again, if it means buying now or buying in a year, you don't know where interest rates are going to be in a year. And I can tell you, interest rates are in the mid 5s right now, and if they go up to 7, 8, or 9%, you're going to be kicking yourself if you didn't buy this year. And on the flip side, if you do have interest rates go down and you did decide to buy, you can easily just refinance whenever you would like to a lower interest rate. But what you aren't going to be able to get back is all of the equity that I've been able to gain over the last 5 years. Now, yes, real estate has absolutely taken off in my local market. I've been very fortunate with the amount of income and assets that I've been able to gain from the equity in all of my purchased properties, but that alone, the equity in my properties are single-handedly carrying my net worth. Now, is the real estate market going to absolutely crumble and crash? No, it's not. We're not going to have a 2007, 2008. If you look back at 2007 and 2008, as far as the requirements to obtain a loan, they were very minimal. I can tell you firsthand, having bought a house at the end of 2021, as well as 2 commercial properties in 2022, the lending requirements are far more strict now than they probably ever have been. Now, on top of that, what you want to look at is foreclosures, but not necessarily just foreclosures. You want to look at delinquencies when it comes to paying your mortgage. And I can tell you, at the beginning of 2022, delinquencies were at an incredible low 3% across the country. Now, if you think about delinquencies, these typically turn into people that get foreclosed on. But for the most part, if you've owned a home for more than maybe 12 months, you're sitting with positive equity. If you're sitting with positive equity, you can easily get out from underneath the house simply just by selling the house because you have a substantial amount of equity. Now, what may hurt people is I actually have a couple clients that contracted a new build house maybe 6 to 9 months ago, maybe 6 to 8 months ago, when interest rates were much more favorable. What I'm seeing a lot now is those folks that applied and got a new build under contract about 6 to 8 months ago now are looking to close in the next couple months, but interest rates have gone up substantially. But again, going back to having equity in their house, I actually have a client myself that I'm personally just going to turn around and sell their new construction home. It's unfortunate they aren't going to be able to afford the monthly payment, but I can tell you they're going to be able to cover all of their closing costs, including use of commissions for the agents, as well as title policy fees and any other miscellaneous fees that they may have, simply by just closing on the property, turning around and selling it because they contracted it about 9 months ago and have a good amount of equity in order to be able to sell it. So going back to the question that I get asked again, far too much over the past 6 months is, should I buy? And I can tell you, again, this is not being biased because I do own a real estate company, but I would highly suggest if you are in the market to definitely look at buying. One thing that we know for certain is where interest rates are now. You also know where home prices are likely going to be over the next coming months as well as years. And right now it's still very affordable to be able to buy yourself a house and have a place to call home. Thanks again for watching, guys. Make sure to like and subscribe. It really does help, and stay tuned for the next video.